All right, let's jump right in. Today, we're breaking down a specific property investment, Agile Mont Kiara. It's a luxury condo right in the heart of one of Kuala Lumpur's most famous neighborhoods. But the big question is, does the shiny brochure match the reality on the ground for an investor? Let's find out.
And look, right off the bat, our source material frames this with a really powerful statement. This isn't a simple buy or sell. It's complicated. It's a real balancing act between huge potential and some serious pitfalls. And that's exactly what we're going to unpack today.
So, to really get this property, you first have to get the area it's in. Mont Kiara. I mean, the name itself carries a certain weight, doesn't it? It comes with a promise of a very specific, very premium kind of lifestyle.
And this, right here, is the core of it all, the expat bubble. This is Mont Kiara's entire identity. We're talking about the single largest hub for expatriates in Malaysia, a community literally built around top-tier international schools and all the amenities that cater to a global, high-income crowd. That is your target market.
And when you look at Agile Mont Kiara on paper, wow, it just ticks all the boxes for that market. It's a freehold property, which, as you know, is a massive plus in Malaysia. It has that prime address, it's new, and the units are big, really designed with families in mind. At first glance, it looks like the perfect investment.
But beyond what's on paper, this property has one huge, almost priceless advantage, especially in a city like Kuala Lumpur.
And this just shows you exactly what I mean. Picture it. You leave your condo, you walk for maybe 5 minutes, less than half a kilometer, and boom, you're at Publica, one of the most vibrant lifestyle hubs in the entire city. No car, no traffic, no nightmare trying to find parking.
You have to understand, in a city that is so famously dependent on cars, being able to just walk to places like this isn't just a nice little convenience. It is the project's single most powerful selling point. It's what sets Agile apart from dozens of other condos, where a car is an absolute must for even the smallest errand. So, the lifestyle appeal, it's crystal clear. But as investors, we've got to look past the walkability and get down to the cold, hard data. So, let's crunch the numbers.
The first number you've got to wrap your head around is the cost to get in. We're looking at an average of 950 ringgit per square foot. Now, for the large family-size units this project has, that adds up to a very, very significant upfront capital investment.
Okay, so you've put down all that cash. What's the return? Well, the estimated gross rental yield is sitting at about 4.7%. And here's the key takeaway. For a premium property that costs this much, a yield under 5% is considered pretty low. It's a big sign that your monthly cash flow might be pretty darn thin.
And this really highlights the central problem, the main tension for any investor here. You have a super high barrier to entry, but the immediate return you get from rent is marginal at best. This is the core dilemma.
So who was buying these things when they first launched? Get this, a staggering 70% were international buyers. Now, that definitely highlights its global appeal, for sure, but it also hints at a potential weakness. Its value is heavily tied to what foreign investors are doing, not just what's happening in the local market. And that reliance on foreign money connects directly to the biggest challenge of all, the elephant in the room for any Mont Kiara investor. You see, the problem isn't the building itself, it's the environment it's stuck in.
The lifestyle is amazing, the building is top-notch. So what's the catch? Because there's always a catch, right? Well, it turns out an investment doesn't happen in a bubble, and the catch here is a big one. The analysis boils it all down to two fundamental and very connected problems. First, there's a massive oversupply of almost identical high-end condos, all fighting for the same group of tenants. And second, the traffic, the constant soul-crushing gridlock that you get from that kind of high-density living.
And this slide just shows you what that competition looks like in reality. Agile isn't operating on its own. It's surrounded by direct competitors, Residency 22, Pavilion Hilltop, and then you've got the giant KL Metropolis project looming over everything, which means years of construction and traffic right now, and a whole lot more supply hitting the market in the future. You know, it's a real paradox. The very same highways that give Mont Kiara its great connectivity are also its curse. Because when everyone is trying to use that excellent access at the exact same time, you just get predictable, severe gridlock and a constant buzz of noise pollution.
So when you put all these pieces together, the premium building, the low yield, the intense competition, you start to realize something. This isn't a short-term cash flow play. This is something else entirely. It's a high-stakes waiting game.
This timeline really puts the whole journey into perspective.
You bought in 2020. Today, you're fighting tooth and nail for tenants in a flooded market. Your real hope for a big payday isn't happening now. It's a bet on the distant future. A bet that when KL Metropolis is finally done, it'll lift the value of the entire area.
So it all comes down to this final calculation. The strengths are undeniable. It's freehold, the walkability is a rare gem, and the units are perfect for the target market. But the risks are just as real and just as persistent. The traffic is a nightmare, the market is oversupplied, and that leads to low rental yields.
And this quote from the analysis just perfectly sums up who this investment is really for. It's not for somebody who needs immediate returns or can't handle a few months with no tenant. It's for an investor with deep pockets and a patient, long-term outlook. Which leaves us all with one final, crucial question. For an investor looking at Agile Mont Kiara, is that long-term promise of what it could be worth the very real pressures of a tough market today? That's the multi-million-dollar question. And it's a lesson that applies to any investment. You have to decide if you're playing for now or for what's next.